Hello, I'm Chris Coleridge. I'm Senior Faculty in Management Practice at Cambridge Judge Business School in the Strategy Group. And I'm going to talk for 20 minutes or so about the role of entrepreneurs in facing the climate crisis, and then dive down a little more specifically into the work that we're doing in Carbon 13. Carbon 13 is a startup accelerator that I and my team have founded in Cambridge alongside my work in the university. And then I'm looking forward to your questions. So I think we're all familiar with the concept that the 1.5 degree global heating target looks pretty hopeless, and the latest credible figures that we've seen going into COP26 look like a 2.7 degree target, or a 2.7 degree reality is a sort of, a fairly good case, right? Not a worst case by any means. And the decarbonization process has started. There's lots of good news stories out there, and there are good news about renewables and about electrification of transport and so on. But we're just not decarbonizing fast enough, and the decarbonizing rate would have to go up at an astonishing level, really hard to credit level, in order to achieve anything like the 1.5 degree target. And what I'm here today to talk to you about is the way in which entrepreneurship, high-value entrepreneurship, high-ambition entrepreneurship can be used potentially as a technology to help address a slice of the problem. Right? I'm not going to make the claim that it's the answer, but I believe it's a potential answer to a slice of the problem. Entrepreneurship is a technology that society has developed to address a certain kind of innovation problem, innovation problems that corporates can't or historically won't address are left to entrepreneurs. Specifically, problems that are highly uncertain tend to be difficult for corporates to get to grips with. You could think of a large organization, a large corporate, as a machine for driving out variance and for sort of creating a predictable, stable environment where a dollar goes in at one end and $1.10 comes out at the other end. Uncertain problems don't have that sort of the characteristics that corporates are looking for when they're thinking about how to solve problems. So entrepreneurs get into uncertain problems. They look at uncertain problems, and what the world and, let's say, the investment industry asks entrepreneurs to do is to map out those uncertainties and turn them into risks. So turn them from something that's just a cloud to something that can be modeled. And then once those risks have been established to a certain point and some potential trajectories for addressing those risks, mitigating those risks has been established, risks around the product, risks around the market demand, risks around the financial structure of the innovation. Once those have been addressed, then that can all be bundled up and sold to investors effectively. Investors take the point of view that, of course, they want to back winning innovations, but it's not as simple as, well, we're looking at a particular innovation. Is this a winning innovation or not? It's often that package of, is this a winning innovation, and is it the right team, one of the few teams in the world that is going to succeed in building that innovation? I'd say there are three highly uncertain, difficult problems associated with climate change. I think this is a decent metaphor for what we're facing. We've been pumping greenhouse gases into the atmosphere at an unsustainable rate since the mid-19th century. We've now got a very severely overflowing atmosphere in terms of the ability for the Earth system to reabsorb that carbon. So if we think of it as an overflowing bathtub, we can break down the problems into three categories. The net zero challenge of turning the tap off. We've been turning that tap off very slowly. The sequestration challenge of draining the tub, or for those my metaphor is a little bit breaking down here, but for those gases that have already soaked the carpet, we've got to run the dehumidifiers. And then the damage has already been so severe that we've got to worry in quite an urgent way, and we've got to address in quite an urgent way how we're going to stop the house from falling down from the flood damage that we've caused. So each of these three categories of problems has a good deal of nighty and uncertainty associated with it. We don't really know how to get to net zero. There are plenty of people who call themselves net zero experts who will tell you that they've understood the climate budget, and they know perfectly well how to get to net zero. But we don't, at the sort of level of the individual steps that we need to take in various industry domains, in the realm of the consumer, we don't have a clear path. So that's the kind of problem that entrepreneurs solve: is what are the steps? What are the new arrangements, the new economic arrangements that are going to allow us to turn off the tap? We've got to do some sequestration, and this is an even more tricky problem from a sort of commercial point of view or an entrepreneurial point of view, because there's no business model currently associated with the sequestration challenge. Just sequestering carbon in the soil or figuring out some other way to sequester it is not a paying proposition at the moment. It's an important thing to do. Various technologies are being developed and tried out, but that sort of commercialization, that business model piece of the puzzle, hasn't been resolved. And then our third difficult Knightian challenge is the resilience side of things, and it seems certain that the food system is going to be damaged. It seems certain that we're going to have mass migration on a level that we've never seen before. It seems certain that there are going to be associated discontinuities of various stripes, perhaps associated with conflicts, perhaps other sorts of issues, right? So these represent problems that, to some extent, there may be commercial solutions to, and that there may be value propositions that entrepreneurs can bring to the table that have a contribution to make. When we think about the decarbonization net zero challenge specifically, I said entrepreneurs they're called upon by society to tackle the problems that corporates won't. And so what are these problems that corporates won't tackle? We know historically, over decades, that corporates are highly reluctant to tackle challenges that are going to undermine their existing system of making profits. So if you think about the circular economy as a concept, corporations typically love the half of the circle that's about supply chain inefficiencies and trying to figure out ways to sort of make money from waste and so on. They don't necessarily like the section of the circle that's about consumers buying less, there being less of a material-based foundation for consumption. And so it's unrealistic to expect the major organizations to step away from their existing profit streams in order to sort of dive into highly uncertain, speculative new ones. That happens very occasionally in the corporate world, but pretty seldom. We know, history tells us, that those innovations will come from the entrepreneurs. In the same way that profit pools and sort of revenue streams are sticky and corporates are reluctant to step away from them, culture and mindset are sticky in organizations. If you think about the fintech side of entrepreneurship, fintechs exist because banks and insurance companies and other financial services institutions don't have R&D departments. And so they find it difficult to wrap their minds around what does digital banking really look like. So it's quite helpful to the financial services sector to have these fintech entrepreneurs figuring out how to hybridize digital and banking. Their best ideas can be imitated by the mainstream or the incumbent players. Their best ideas can be acquired by the mainstream incumbent players. And in the work that I do in Carbon 13, we're certainly seeing analogous activity in construction, in mobility, in energy, where the incumbent industry, the incumbent players find it difficult to think about the leaps that would be necessary to have decarbonized versions of what they're doing. And so entrepreneurs are springing up to provide those solutions with the expectation and hope that they might be able to sell those back to the corporates. Across the entrepreneurial world, we know that entrepreneurs typically get started on a challenge because they want to build something or they want to do something. That's their sort of basic motivation. They don't conduct a detailed return on investment analysis before they get into it. And for that reason, and for another, which I'll loop back to, entrepreneurs are willing to get going in a space where it's evident that the regulations are moving, but the ink is not dry on the new arrangements. So in this space, entrepreneurs are springing up all over the place on the basis that they believe there will be a carbon tax. And when there's a carbon tax, business models that currently just don't work or are minimally viable will suddenly become extremely viable. And so this kind of getting started before it's really clear how the regulatory game is going to play out is something that entrepreneurs do, and corporates really don't feel comfortable with it. Looping back to what I said was the second reason for this, it's just a structural issue partly. Corporates who play in regulatory gray areas tend to get legally burned, whereas entrepreneurs find it much easier to try to figure out how they can navigate that, navigate a sort of changing or nascent regulatory space. The final area which corporates are not that good at is innovation that drives behavior change. If you look at the sort of Beyond Meats and Impossible Foods of this world, you have to ask yourself, well, why didn't the food giants, why didn't Unilever or Nestle see those opportunities as ones they should get involved in? Why did it take entrepreneurs to get those companies off the ground? And it tends to be the case that corporates will go through a thought process which requires looking at the existing size and a sort of conservatively projected growth rate for a particular market space that they might want to get into, and not engage in sort of leaps of faith about, well, what if we could move consumers' behavior on in a particular way? They're more interested in jumping on the bandwagon once that's been done than really getting started. Now, don't get me wrong, I'm not arguing that there's an opportunity to change consumers' behavior simply based on, well, we're going to sell you something that is just like what you currently consume, but it's lower carbon. There's always got to be a what's in it for me for the customer. But what's in it for me and a lower carbon intensity does seem to be possible. And I'm seeing some fantastic questions beginning to stack up in the Q&A, which I'm eager to get to grips with. I really like the last one from anonymous attendee, and I will get to grips with those very shortly. So, as I said, back in spring 2019, with the blessing of our dean in the business school, I put together a team And alongside my work in the business school, we started an accelerator here in Cambridge called Carbon 13. And Carbon 13 is seeking to develop and invest in and launch into the world entrepreneurial ventures that have the opportunity to, or have the capacity to take 10 million tons or more of CO2 equivalent emissions out of the emissions base. Now, when we started back in spring 2019, 10 million tons seemed like a chunky target, and it is a chunky target. I mean, if you think the average Briton has perhaps a 6-ton carbon footprint, depending on how you do your numbers, a 10 million ton reduction, annual reduction in the footprint requires a business that makes a significant impact on an individual's carbon implication, if you like, and which has millions and millions of customers. Right? So a 10 million ton target is quite ambitious, but we've been intrigued and amused to see American venture capitalists in this space, principally Americans, there are a few Europeans who go down the same road, talk about only being interested in 500 million ton projects or billion ton projects, right? In a typical startup accelerator, the talk is of unicorns, right? Fostering businesses that have a potential to have $1 billion valuation. In Carbon 13, this 10 million tons is our North Star metric, is the aim that we suggest that we call on entrepreneurs to look at. We want them to lift up their eyes to highly scalable, highly internationally mobile innovations from day one, rather than focusing on projects which have good outcomes but don't have the potential for scale. I talked about entrepreneurship as a kind of technology that humanity has already developed for diffusing innovations and diffusing them rapidly. So the idea is that we want to sort of take advantage of this pre-existing social institution. One of the first things I did back in 2019 was get a group of my business school students to look at existing sort of carbon mitigation going on from startups we looked at the Clean Tech 100, a good, reasonable resource in this space, and it was pretty straightforward to identify startups that had or were well on their way to approach these. I talked about scalability. This is a 6-bullet point slide for the lecture hall rather than an alumni festival. But there's a lot that we understand about what are the characteristics of a scalable project, and we focus our entrepreneurs' attention quite strongly on that. Right? Timing is a very significant matter in entrepreneurship, and we're seeing some great signs that the sort of times have come for this stuff. And there are new investment funds popping up literally every week that claim to want to write $500,000 to $2 million checks to support this type of innovation. But the key underlying criterion for the types of innovations we need to bring to the world is that they can diffuse in a meaningfully short period of time. Now, I've certainly, when we were raising the money to get going with this project, I certainly talked to many climate change concerned funders and investors and so on who said, look, I love this idea, but it's a bit late. It'll take 10 years for these ventures to get off the ground and really start to make a difference. And we don't have that kind of time, and I'm looking at other types of solutions. And I have complete sympathy with this argument. My logic could be called a sort of flattening the curve logic, if you remember that metaphor that we heard so much of at the beginning of the pandemic. The idea is that we've got, in my view, I understand the public policy game that's being played around the 1.5 degree target, but I don't like the way in which that's not looking reality in the face, and we're not seeing that all contributions to these to the decarbonizing effort have to be made. Our ventures not only have to be scalable, they have to have high speed of diffusion. right? And these 5 bullet points go back to the work of Everett Rogers around, what causes ideas and innovations to diffuse quickly through society as opposed to more slowly. I certainly engage, and I'm imagining I might be about to engage in the Q&A with many people who question whether venture capital is really the right social institution or the right pre-existing institution to take advantage of this, or to try to launch these sort of innovations. My argument is that venture capital is here. It exists already. It's a sort of it's a fuel for diffusion that we can take advantage of right now. It has some wasteful characteristics, and that's unfortunate. But we believe that launching 1,000 ships is what's required. We can't know ex ante which ones are going to get through, but venture capital has the quality that it's high, like its capital itself. It's highly international. It's relatively quick as an engine of sort of diffusing, and it has a number of attractive characteristics. I believe we're already seeing some interesting changes in the venture capital industry around the climate tech challenge, as opposed to some of the way the venture capital industry has developed around the sort of microcomputer and internet challenge in recent decades. So I do see a very gratifying question in the chat saying how can we how can one help? And there's my email address and the website of Carbon 13. Of course, you can also contact me through Judge Business School through the faculty directory on the website there. So I'm going to get rid of that slide. Okay. I don't know if I'm going to get rid of any slide. I'm now going to put my glasses on and look at the challenges. So Garth's question is a great one to start to kick us off. He says, look, if you look at the Chatham House risk assessments, we're really not in a situation where sort of marginal incremental stuff is going to provide the answers. I think that I hope I'm paraphrasing your question in a reasonable way, Garth, and I think that's right. We've had our first cohort in Carbon 13 kicked off in March 2021, and it's gone very well so far, and we've launched 8 innovations. You can read about them, and now we're on to our second cohort. Started last week, and we're working to get to the point where we can be generating 50 or 100 of these a year, as part of our work. My obsession at the moment is, okay, how do we stop too much incrementalism? How do we go for the moon every single time? How do we go for breakthroughs? We certainly, Carbon 13, when we started on the journey of building it, we thought, okay, well, this will be a great way for clean tech or climate tech ventures to get showcased and to sort of be able to raise money. In the current investment environment, it's reasonably straightforward for any quality startup venture to get the basic level of investment. Whether they're able to get more investment depends on the progress that they make. So we're no longer in that position of, our projects might be able to get investment if they show some basics. It's really a question of when they're going to get that investment. So Carbon 13's role has shifted to a sort of helping the entrepreneurs found their team on first principles, get the team working in a way that we know is conducive to high performance, found their value propositions on first principles, their business model on first principles, and their carbon impact story and forecast on first principles. We don't, for example, we don't fund we don't invest in or fund projects which are about making the carbon offset system work better. Right? Our thesis is that carbon offsets is flawed, deeply flawed, as a way of trying to sort of create some balance in this system, and the system is going to fall over sooner or later, hopefully sooner. And this, investing in something that's only going to reach maturity at about the point where the whole system, is quite quite likely in our view to fall over doesn't make sense, right? So we're looking for ventures that have a sort of a potential breakthrough trajectory and have some kind of longevity, rather than sort of what I'd basically call greenwashing, pursuing some kind of flash in the pan sort of logic. Garth's also asking, so underpinning Garth's excellent kickoff question is, is 1,000 little ships enough, right? And obviously I don't know the answer. Our thesis is that somehow we hope that there's a power law distribution in the impact that these projects can have, and that built into the entrepreneurial sort of adventure is a helpful level of variance of outcomes, right? And that we may see some really striking outcomes from these types of projects. Can't guarantee it, but that's the sort of underlying logic and hope and intention. Garth's also asked about net negative. I mean, do I believe it's possible? Well, I believe a lot of things are possible, Garth. I think we don't know yet. Technology has a tendency to improve, right? Anybody who studies technology will notice, you'll notice this characteristic pretty early on, is that once a technology is out there, and especially once it has cash flows associated with it, then the financial world, what is the beneficial role of finance in society? It's to channel resources to projects that should be done, right? That should happen, and so especially if there's a carbon tax, and that's my sort of personal wish for COP26, is the first steps for some countries making some first but bold steps towards or bolder steps towards carbon tax. Then we start to see a potential business model for direct air carbon capture and other technologies, which potentially could drive those innovations in the direction of improving. Now, I mean, the logic I've just put forward hasn't worked for nuclear fusion over the last few decades, so it's perfectly possible that direct air capture won't work. But there's also a case that it takes the commercial model coming into focus, becoming evident to a few people, to really start the engine of innovation moving a bit more quickly. Garth's asked me also about corporations being worried about stranded assets. I said, look, corporations don't do this type of innovation. So we see the net zero pledge, and it's a fascinating movement, the net zero pledge movement. But even the most progressive, to be applauded corporates like IKEA and Unilever there's still quite a lot of what I would call white space in their net zero plan, where they've got some great ideas, they've got some great impetus, they've got some great initiative, but they have big areas where they're not quite sure how they're going to get there. And of course, my thesis is that part of the answer is that they're going to get help from entrepreneurs to figure out those steps. I really like the force corporations to get to grips with their stranded assets model of change. I think it's very interesting. I'm less sanguine about how much action will be taken in the near term on the basis of that stranded asset sort of logic. The work of Client Earth, for example, in this area, and trying to sort of create real legal liability for those stranded assets, I think it's pivotal, and there may reach, if they keep going, they may reach some kind of tipping point where they're able to drive things. But my experience and observation of corporate decision making is that next quarter's results are sort of taken for granted, must be obeyed starting point, and that only once that once that imperative has been followed, are we really able to see the other goals of a corporation come into play. So anonymous attendee has said there are some very poor examples of entrepreneurship. Musk, Bezos, and Branson getting into space tourism. Aren't some entrepreneurs stuck in a useless mindset? Yeah, absolutely. absolutely. I mean, it's there. Much of I'm not suggesting for a moment that entrepreneurship itself is the sovereign remedy here. This is a particular focus on how entrepreneurially driven innovations in the climate tech arena may have an impact. It will be interesting to see whether the discourse changes over the next 10 years away from, where entrepreneurs are routinely questioned about, if you listen to the way journalists talk to entrepreneurs, they will often go down the road of questioning the pros and cons of a particular innovation from the point of view of sort of, let's say, social equity. How does this affect people? How does this affect rich people? How does this affect less well-off people? It'll be very interesting to see a world where entrepreneurial plans are questioned from the start on their carbon impact. And the idea that we're going to bring something into a full flowering in 10 years' time, which is extremely carbon intensive, will start to be sort of mockable and laughable. So anonymous attendee asks, sorry, Peter, I almost skipped your question. Yes, corporates struggle with uncertainty. We agree so far. What is the potential for corporate VC and corporate entrepreneurship in making a difference? Should this be part of the effort? Well, yes, great question, Peter. I think corporate entrepreneurship tends to happen under the umbrella of this sort of short-term profit imperative, under the umbrella of, well, we're interested in toying with these new or experimenting with these new developments, but the notion of actually folding it into our core business model and making it an essential part of what we do is harder for corporate entrepreneurs, intrapreneurs, as they're sometimes called, to really advance. And they're often sort of stuck in a waiting room, if you like, rather than being able to approach the top table and make real change. Corporate venture capital is another matter. I think. It isn't the answer. It isn't some panacea either. But it is fair to say that there's an energy among a growing population, a large and growing population of corporates, to engage with net zero, and it's a perfect. Corporate VC potentially does represent a good way for them to fold in the innovations that have proven themselves into sort of outside the corporate into the logic of the corporate. We've got to be slightly nervous about promising avenues of attack getting sort of choked off because they get stuck in this waiting room that I referred to. But that's where the 1,000 ships come in. And if you have some teams that work with the corporate venture capital arms and some entrepreneurial teams that don't, we might get some level of equifinality from that. Anonymous attendee asks, how can alumni invest in these carbon-13 startups? So I've shared the website, and you're welcome to email me, and I'm happy to provide a signpost to the way that can happen. These projects are all silos and do not link to each other. Well, Carbon-13 is a community, and it's a community. We're not just a sort of a pipeline or a sort of funnel for these, or a way station for these innovations. We are trying to build a community, and we often talk internally about the coffee houses of the famous coffee houses of London, right? And the idea that. It was in the coffee houses of London that the idea of the corporation was born, that many of the ideas that underpinned the Industrial Revolution were born, and in our extremely immodest way, we are a bit immodest at times, we try to think about how can we facilitate the connections and communications that are required to get that sort of clash of new money, new ways of thinking, old ways of thinking, that is required to sort of bring breakthrough innovations to light. And if that sounds a bit high-flown for you, it almost sounds a bit high-flown for me. I would say, on my journey building this program, I've met a lot of engineers who believe that this is fundamentally that climate change is fundamentally an engineering challenge, and I've met a lot of what I would call social impact folks who would say it's fundamentally a sort of a behavioral challenge. It's all about kind of moving consumer understanding onwards and so on. At the very least, those two groups need to meet and collaborate, right? Engineers typically only know other engineers. Social impact folks know a lot of other very, well-intentioned, properly intentioned social impact folks. Those two groups need to meet. But we're trying to create an ongoing, persistent community that can be the seedbed for the kinds of clashes of ideas and that really lead to the generative innovations. I mean, our program has embedded within it a sort of investment component where we invest in these ventures. But I will be just as happy, and I will be just as, I don't really care whether the successful innovations that arise from the work that we're doing, that we made a tiny pre-seed investment at the beginning of them and are participating in their success or not. We've got investment and we've got money into the picture because if you want fast diffusion, you need highly ambitious money as part of the picture. I can already look, if I talk about our first cohort, so we had 23 teams come together, and they're working across all sectors. Every sector of the economy has some kind of carbon implication, so they're working across all sectors. The call to the entrepreneurs is come and work on something that could potentially have a 10 million ton impact. If I look at those projects, so we had 23 teams come together. They pitched for investment in mid-July, and we chose 8 of those for investment. Now, if I look at the ones that didn't get investment, the 6 in particular are continuing to work without our money. In one case, they've raised money without us, and I believe several of the others will do so by Christmas. And we're about sort of being that sort of community of cross-fertilizing entrepreneurs that can really drive some kind of breakthrough. Anonymous attendee asks, is there an inherent contradiction in carbon 13? Yes, absolutely. It draws on the very economic system that is responsible for this disaster. Yes, well, that's absolutely right. And when I first started on the journey, back in early 2019, I sort of came to a realization that I was going to do something a bit different for the next phase for the rest of my career. And I went and talked to Extinction Rebellion. That was certainly an avenue I considered. I think I might have been the only business school lecturer member of Extinction Rebellion, but I decided not to join. And my logic was, I'm not sure whatever we do have time to do, I'm not sure breaking capitalism is something that we have time to do. I'm not sure that sort of figuring out how we remake capitalism and then on the basis of that remade capitalism figuring out the engines of innovation development that would arise in this new remade economic system, I'm not sure that we have the decades that would take. So this may be lighting a candle against the darkness. It may be that the venture capital route to innovation does contain the kind of contradictions that weigh this down, but we've got to try. That's the way that we look at it. We certainly firmly reject. We have entrepreneurs coming to us with ideas that fundamentally I would describe as put a green label on it and tell people it's trying to make a difference to carbon, and they'll feel better about their climate anxiety, and we fundamentally reject that. Christiana Figueres puts it nicely. She says, we don't need to ex ante work out the new economic arrangements that we are going to live under post climate crisis. We are going to arrive at those arrangements, and then we'll know what they are. Right? So, in a sense, what I'm expecting and hoping for and driving these innovations that we're working on to try to achieve is to be part of that new arrangement. This is a perfectly adequate way of describing what entrepreneurs do. Is there's political change, there's social change, there's technical change. Entrepreneurs' job is to re-knit the economic arrangements of life around those political, social, and technical changes. And what could be a bigger political and social change than the upheaval that we're about to see through climate change? Graham. So I'm going to treat, Taryn, your question about corporate venture arms as answered by Peter, by my response to Peter. If you don't feel it's answered, then you could ask a slightly different version, or drop me an email. Graham has asked me your predictions on sovereign debt being traded off against climate commitments and what this means for entrepreneurial opportunities. So the engine that we see, the current engine that we see at the heart of our initiative, or one of the sources of energy in the initiative, is the net zero pledge. Right? The net zero pledge is a classic precursor for entrepreneurial activity, which is you have a customer, the customer recognizes they have a problem, they've put their hand up and said, yeah, we have a problem here, and they have inadequate answers as to how they're going to solve the problem. Right? And I'm certainly seeing very clearly, I've been deeply gratified in the last 6 months to see built environment companies and food and agriculture companies in particular be extremely open to innovators and entrepreneurs knocking on their door and saying, I think I may have a route to an incremental contribution to the route to net zero for you, and that that there's there is an energy that's created there. So the national game that's implicated in your question, Graham, the national game of how are different countries going to sort of play geopolitics around deferring this question, kicking this question a little bit further into the long grass. I'm almost suggesting that the sort of commercial route, the corporate-driven route to innovation is a way of bypassing this problem, right? Is a way of going where the market demand to reduce carbon is, which, as we see it at the moment, is based in the challenges of the corporation and the challenges that lead to the net zero pledge. Deborah asks, I hope that's clear, Graham. I feel it's a slightly inadequate answer, but I'll leave it there. Deborah asks if our projects are required to undergo a carbon audit. So great question. Of course, at the stage of development that they're at, there's not that much to audit, right? It is a forecast rather than an audit. Our work, and one of my co-founders is Dr. Nikki D, who's a long time fellow at the Cambridge Institute for Sustainability Leadership. We work with the ventures to say, well, from first principles, trying to consider rebound effects, trying to consider indirect consequences of what you're trying to bring about. Can you stand up a case that you, the venture, make to us, the investor, on how the project is going to, within a 7 to 10 year time frame, reduce CO2, or I wouldn't even say how it is going to, but how it potentially can reduce CO2 equivalent emissions by 10 million tons over a 10-year basis. Now, as part of our investment, we require them to do some carbon impact reporting to us on a 6-monthly basis afterwards. But at the early stages, there isn't that much to report. Robert asks, as an entrepreneur, I create enabling technologies in hydrogen. Well, drop me a line, Robert, and I'm happy to sort of try to tease out some of the issues that you're facing if you think that would be helpful. I think it's one of the conjunctions that we try to bring about through Carbon 13 is bringing together technical folks who have a clear vision of what technically might be desirable and feasible, with commercial folks who have their own clear vision of what might be desirable in a commercial sense and viable in a commercial sense, right? So this magic trio of desirability, feasibility, and viability is sort of one of the foundational frameworks that we use to think about innovation. We certainly, in our first cohort, we did see a project that we're pretty reasonably pleased with, not a hydrogen one, but a project that we're reasonably pleased with, where the technical founder had, let's say, a slightly flippant way of putting it, had sort of wandered in the wilderness for a few years and not really made the kind of progress. Progress looked to him like we've moved from 100,000 Innovate UK grant to a 250,000 Innovate UK grant, and now we've got some potential deployments in various countries around the world. It took a commercial founder, a private equity, experienced person who could sort of look at what was happening, come up with a plausible line of, okay, this is how this might scale up. These are the sort of steps in which this might scale up. These are the steps in which these linkages that you mentioned, Robert, might be established. And here's what a financial model would look like that sort of, tracks that progress, right? Now, does the work of that commercial entrepreneur make the project any less speculative? No, of course not. It's still an early stage innovation project, which by definition is a fragile reed. But it tells a different story that a different class of person, including the class of people we could call investors, can feel more comfortable with, can understand. And therefore, this particular project that I'm talking about has been able to make much more rapid progress than the technical founder working on his own had been able to make, and they I believe will have raised a 7-figure seed investment by Christmas, and that's what you raise, Robert, is part of the use case, if you like, that entrepreneurs coming to us are trying to tackle, right? Okay. I don't see any more questions. Oh no, I see one more. Deborah. Deborah, very, very apposite words. Thank you. Thank you for your thank you, and thank you for reminding us that we are in this together. I see 2 minutes and 40 seconds left on the countdown clock, and I think I've tried to address all of the questions that you've asked. So I'm not sure what the protocol is, whether we draw things to a close. All right, that's what we'll do. We will draw things to a close at that point. Hope it's been an interesting session for you.